It's that wonderful time of the day again. We're running through some multiple choice questions here. We're going through the revenue, expenditure, and cash cycles. Beginning off, we see that during a recent audit of the revenue cycle, a CPA found the client had $1 million in accounts receivable recorded for fictitious customers. Good job on the CPA. Wonderful job. Congratulations. Which of the following tests most likely facilitated identification of the fraud? Couple things. First, we're going to see these are different procedures. I'd say we can eliminate anything that doesn't normally account for a standard substantive procedure for accounts receivable. Let's think about what those would be. Well, normally when we are testing accounts receivable, we deal with confirmations. So we'll look for answers that have to do with those. We're going to probably eliminate any analytical procedures if we see any. And let's just get going. So examining the reconciliation between the subsidiary ledger and the general ledger control account. The subsidiary ledger, prepped by the client, general ledger, prepped by the client. This is not going to help you identify the fraud. You're going to need to have checked with a third party, because if there's fraud, then the client is covering it up. So you need something externally to confirm that for yourself. Sounds good. We're going to eliminate letter A. What about letter B? Reviewing the support for open sales orders not yet shipped at December 31. I'm going to say I don't like that one there. I mean, reviewing the support for open sales orders, that doesn't really sound like something that would help us find accounts receivable fictitious customers. Again, this is very much going to be an accounts receivable confirmation situation. Reviewing the segregation of duties for staff who had responsibility for sales, shipping, and invoicing. Again, I really want to hone in on letter D here. Sending positive confirmations to all the client's customers with balances. This is going to be hands down the best answer. If we're thinking about it, the client's listing, they have, let's say, 10 customers. If you mail confirmations to all 10 of them and you don't hear back from, let's say, 2 of them, well, then you follow up on it. And if they were material, which this presumably is, I mean, $1 million, if we say it's $1 million, it's probably insignificant. It's probably significant. Insignificant numbers in the exam would be like $100 or $1,000. So this is probably pretty significant. And the auditor is going to keep following up. They're not going to just give up and say, oh, sorry, we didn't hear from these customers. No, they're going to look into it and see, okay, these customers don't actually exist. Again, that is how we're going to discover this, is through positive confirmations. That is the solid best answer there. Assertions about this is existence, right? This is existence. Do the customers exist? And as such, do these accounts receivable exist? And assertions about existence are going to need to be confirmed. So we're not worried about rights and obligations. We're not worried about anything like that, but positive confirmation would help in all these cases. Audit evidence needs to be verified through a third party. Next up here, at the end of each month, the senior accountant compares a vendor statement to the accounts payable. This is an example of what? All right, thinking about this. Now, is this going to be an example of authorization? I don't really see any authorization going here. I think this is like the senior accountant checking something, comparing the vendor statement to the accounts payable to make sure that they add up. Because let's say we rack up $1,000 of accounts payable, that should pretty much line up with, let's say we owe the vendor $1,000. So that I wouldn't say has anything to do with authorization. This is just confirming dollar amounts rather than is it properly authorized. Review procedure, that sounds like it could be it, right? Just reviewing this situation. It's a normal, let's say, monthly procedure that verifies these numbers. So I think that's a good answer. Physical control, well, physical controls stop people from, let's say, taking cash or assets. And that doesn't really sound like what's going on here. And segregation of duty, well, there's only one person here. There's no 2 different people doing 2 different jobs. So because of that, I'm going to cross this off, leaving us with just review procedure. This is comparing independent documents with company records. This is a form of a review procedure. The vendor statement is from the vendor, so it's third party, to the accounts payable. That is generated by the client. Powering through a few more questions here. Which of the following is a step in completeness, valuation, and allocation? Existence. Which of these are going to help with these accounting assertions? Well, neither, both, and we've got bank reconciliations and bank confirmations. What is the difference here? Well, bank confirmation, this is going to be us mailing to the bank and saying, hey, the client says they have $10 million in their account. Do they actually have $10 million? And I would say, yeah, that's going to confirm the completeness that all the dollars are accounted for. That's going to confirm the existence of it, confirm the value of everything in the account. So I'm going to cross off neither because it's definitely going to be at least be D. And then we can cross off letter B. But is it going to be both? Well, bank reconciliations, this is the process of comparing the book to the bank to the book. What does the bank have and what do the books say that they have? And this is going to account for deposits in transit, outstanding checks, all items that reconcile the two amounts. So I am going to include bank reconciliations as well because this is going to help us make sure that everything's included. It's going to help with completeness, valuation, and allocation to the correct period. I'm going to say it's going to be both here. Looking good, looking very good. Let's move on to the last one. Which party should not be involved in the handling of cash receipts? Probably any fraudulent party, any bad actors. We don't want them, but let's see who is not going to be involved. All right, management. We've got cashier. Well, cashier is the one handling receipts, so I'm going to cross that off. Accounts receivable department. So who should not be involved? Now, generally, like who should be the one actually doing cash receipts? Yeah, the cashier. Management, I'm suspicious of that because management shouldn't really be involved in the actual day-to-day processes of the company in the sense of managing the handling of that. Management is going to be generally dealing with authorization, right? Record keeping, custody are generally going to be people below management. The accounts receivable department and the accounting department, these are going to deal with cash receipts as well. So management does not need to be involved in this process. The accounting department is going to be record keeping. Cashier is going to be custody, so making notes of that, right? This is custody. Accounting department, what do? They are the record keepers, they're the bookkeepers. And accounts receivable department, this is going to be authorization. Now, these people are all part of the cash receipts process. Because what's going to happen here, well, accounts receivable department is going to say, we got the cash. We can now write off this receivable because we got the cash. Management should not be involved because if management has the ability to authorize something, they should not be anywhere near cash. Management is the most likely, is in the best position to perpetrate fraud. That's something we'll see in other multiple choice questions as we go. Awesome. I had a good time with these questions. Keep powering through. Get some coffee, stretch, go on a little jog, whatever you need to do. Keep yourself motivated and you'll get through this. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.